What's up, guys? Welcome back to another episode of the Market Pulse. I'm here today with my good friend Carrie Ann Sear. Carrie Ann, how you doing?
I'm good. Good to see you.
Good to see you as well. Thanks for joining us. I'm going to try to look at my camera and not at the computer while we talk. So I appreciate you hopping in on the episode with us. And again, you and I go way back. What have we been doing this together? 20-something years?
No, right? Wow.
Yeah,
Don't age
long
us,
time.
David. Don't age us.
Yeah, that's right. We started when we were 15, so we're fine. No, so you and I have had a lot of time over the years to really understand what's going on in the industry, what's going on for the consumer, how to serve them at the highest level. I always take great pride working with great partners like you because we know the perception of what it takes to buy or sell a piece of real estate and the actual complexities of buying or selling a piece of real estate usually don't align with people's expectations of what they think is going on. And so I know working with trained professionals like yourself, being able to get people in hands of things that I always say, like, I want the buyer to enjoy the HGTV version of real estate and allow us as professionals behind the scenes to be doing all the heavy lifting, right? To be making sure that the wrinkles aren't there and they don't get caught off guard with the drama. And we can kind of minimize that because we know emotions run high when it comes to large purchases. So real quick, tell us about your background. Introduce yourself if you don't mind. Let people know who you are if they maybe don't.
Yeah. Thank you so much, David, for having me. I'm Carrie Ann Sear. I manage and operate the local CMG financial office here. I've been in the mortgage industry now for 26 years. I'm very grateful for it. And so I'm super passionate about solving the problems of all things mortgages and or creating solutions for clients. We always say we love all people, all homes, and all credit profiles. And so it's been a lot of fun being able to serve the community with all things mortgages here. And so we're a direct lender. We serve from our first-time home buyers to our luxury clients, everybody in between, your investors, people looking at doing renovation loans or new construction, financing, et cetera. Maybe those that need a bridge loan and or a HELOC, et cetera. So all things mortgage, one-stop shop is kind of what we're all about.
So, you're probably not, I'll celebrate for you. You're one of, if not the top lender in the state, right? Have been for many years, always in the top handful of professionals that do this at a high level. One of the reasons you and I align is we like to focus on running effective businesses that serve consumers at a high level. What makes it different? You and I got to know each other through me getting people early on in my career. They would get through a process. We'd get a week within closing. And then, like so many others, out of left field, something would come up and we'd hear, hey, we need to talk. And right. And I met you because I found out that it was like, we called you the fourth quarter queen, right? Like, we knew last minute there's a problem, send it to Carrie Ann. She can probably figure it out. And over the years, I've always said, like, it is so impressive to watch you do that, which is eventually I said, like, let's just give it to you in the first quarter, right?
Yeah.
Rather than the fourth quarter. Um, why is that possible? What is it that makes you so good at that versus maybe others that aren't as experienced in the
Sure.
business?
I'm very grateful that I got in this business from the ground up. And so I really started right at the bottom. And I learned from a very strong gal in the industry. And English was her second language. And so she would basically give me a piece of paper with a few words on it and said we needed to get it closed in 30 days. So I learned the business kind of a different way, but I was able to structure and put loans together really early on in my career. And so, knowing my craft, I know you and I, as business owners, we really focus on studying our craft on a regular basis. And so, for me, knowing my guidelines, knowing what is possible, what's not possible, you know, um, when to go left, when to go right, how quickly can I achieve this goal, right, to be able to make a closing date possible. I think really started off with my early career as an assistant, as a processor. I was an underwriter for one brief moment until they took the red pen away because I was like Oprah, you win a house and you get a loan, and I was a little too good at that time. But yeah, allowed me the opportunity to know that. I think sometimes people get into this industry and they want to be the you and I's today, and they want to go straight to the top. And maybe they don't think about the foundations and the layering of it. And so I'm very grateful for that. And really a big part of my business today, all of 20 something years later, is still being the gal who steps in at the fourth quarter, twiddles my nose and creates that magic. I would never take on a loan that I don't think that I could serve, and a clientele of that. And I have lived a life. I was a 20-something-year-old once before, right? Made a few mistakes, and so I also wanted to be able to serve all people, right? And so I really have studied on how to assist the clientele who has all different credit scores. And so being able to be somebody within the craft that or my industry that can serve all people with all credit profiles, I think was really important for me. And so I think that combination of knowing my craft and then finding a great company that can back me, I think is important.
Yeah, I'll second that. One of the things I've learned from you over the years is, and I was on a podcast earlier with Dana Hutton, our other
Yeah.
co-host of this, and she and I were talking about that. Real estate isn't complicated, but it's complex. And that almost sounds like the same thing, but I think from the consumer standpoint, they underestimate the complexity of what's going on behind the scenes and how having a well-educated partner with them helps them navigate the trouble spots that are going to come up in a normal deal. We know how to kind of see around corners, anticipate those things. What I've learned from you over the years, your ability to understand the programs that are out there for people and the ins and outs of it, right? So here's my fifth grade knowledge. I'm not a mortgage lender. I just play one on TV. People take an application, they run it through a system. Today, technology kind of tells them whether or not that person can have the money. They're kind of doing it for a bank or for like you said, who they're aligned with. Maybe they have overlays or they have certain criteria that needs to be met. It's my correct me if I'm wrong, but it sounds like you're not just running it through a system and taking a yes or no. You understand people's situations. You understand what programs are available to them based off of what's written in the program, not off of what technology is telling you. And then you've aligned yourself with a great company that has as few overlays as possible to give fair people a fair chance of getting a mortgage. Is that good in the nutshell?
Absolutely. I'll use the example. An agent reaches out, right, on the jumbo transaction. They say, I have a luxury client with a low credit score. And lender A says, oh, I need a 680 credit score. Or this one says, I need a 700 credit score, right? And so they just heard what they wanted to hear. Where I look at, well, what is the purchase price of the home, right? And then what is the opportunity on a conforming loan, right? And right now, 1,030,000, I think it's 29 and some change, can be used on an FHA loan, right? And so you're looking at just thinking differently, right? I mean, I think I wasn't really book smart, so I've always just kind of thought outside the box and how to navigate life just, in general with all of that. And so come to find out, they were looking at a 1.2 and we're going to put $200,000 down anyways, right? And so you went from lender A, B, or C who said they needed this score, this score, this score, where I'm just asking a few extra questions. Someone taught me a long time ago, be curious. Like Curious George, right? The more that you and I are curious and we ask more questions, we probably can land at a really solid, solution. I had another gal post all over social media that they were looking to do an investment manufactured home, right? And I know you can't do that, but I reached out to her and I asked lots of questions. Well, come to find out, they were purchasing it for a family member. Well, you can purchase a second primary home for a family member with 5% down, especially on a manufactured home, right? And so they heard no, 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 where sometimes you and I just ask a couple extra questions and we can make that magic. Now, I'm going to say it's magic and I'm going to say I twiddle my nose and all the things. But again, it's really just knowing, our guidelines and knowing what's allowed, and being really
Sure.
confident in that too. I think, like you said, AI is taking over. I fear the next generation of lending a little bit because even today, the new loan officers, they can plug a couple things in and it pops up that you can do A or B or even C. But I would recommend, or I would say to them, why are you doing A, B, or C? Right? Like
Yeah.
they don't know the why behind it. And so I do still encourage kind of that old school mentality of knowing why we're going left or right. But we'll see where tomorrow takes us. But I'm still in it to win it for many more years now. So
Yeah.
I'm excited to continue to serve our community.
Well, I think to that, AI is a great tool. I mean, look, you didn't become a top performer by accident, and you'll continue to be a top performer independent of what tools are provided to us. I'm excited about what AI provides. I'm excited about how much faster it allows us to move. And we are going to have to not abdicate our thought process to a machine where we still are looking at still thinking things through. It should allow top performers like you to move faster in the industry and serve more people at a higher level through taking care of the rudimentary pieces of it, right? That can be handled. yet ultimately smart people using smart tools just makes it better for everybody. So I do think we continue to see a consolidation of the industry through technology, through the way the industry. I've seen it change a lot. I was doing a interview for Inman in Nashville, right? We had that panel, and it was every year in this industry the sky is falling. Every year there's something changing, and we're going to get. And it's like if you just learn to tune all of that out and continue to just chop wood and carry water, you're going to be fine, right? I think a lot of agents are getting too caught up in it. But let's kind of shift a little bit and talk about that, right? As you see the industry growth and the evolution, we talk about a consolidation of the industry. So we start to see smaller brokerages getting consumed by the larger. You see more larger brokerages getting wider, maybe in some spots, not everywhere. But you start to see it used to be 80-20, right? 20% of the agents doing 80% of the business. Then you and I thought it's more like 90-10. Now you could almost argue it's 95-5, right? You have a huge segment of the industry that are not selling homes or not doing loans. And you have this other segment of us that are having some of the best years by trying to find ways to serve clients effectively. The challenge with that becomes how do you serve? I think this year we'll have the pleasure to serve about 600 families at the Huffaker Group. And how do you do that at scale and still make sure that you have a great experience? What are you seeing out there? You have a lot of relationships with a lot of great agents.
Yeah.
What are you seeing that great agents are doing right now to be successful in the current real estate environment?
Yeah, I mean, I think you're right when you say over the last couple of years we've been hearing a lot of noise, right? And every year we're gonna kickstart. It's gonna be a new year, and we get excited, and we hit February, March, and then we're like, "Oh my, is it gonna change?" But I'm a big believer, kind of going back to that horse mentality. We're all running our own race, right? I mean, you could get sucked into the negativity of what somebody else is saying. It's a bad market again. It's a bad market for them. It's a bad market for you if you choose, right? We're in Middle Tennessee. We're very grateful to be in a booming area,
Yeah, great
and
market.
yeah, and there's still many great markets, that are out there all around. But again, what are we, you and I, looking to do? We're just looking to run our own race, right? And so there is still real estate selling. I mean, there's still buyers purchasing, right? Investors are doing, and what you and I can see in the forefront with a lot of the systems out there is that the builders are still building, right? They're buying up the dirt, which means that's a good sign for all of us, right? They are usually are ahead of the game on some of the things. And so, yes, I do believe that, what got us here may not get us there, right? So every year I'm kind of getting ready to get pumped and maybe making some tweaks, letting a few things go, increasing a few other things or bringing on a few other things. But really, at the end of the day, I think you and I are kind of doing the same routine over and over again, and then we're tweaking it, right? Atomic Habits says it only requires you and I to make some few minor tweaks to see some major improvement. And so, I do think that small percentage of folks that are really out there to win it, they have the full foot in, right? Are we interested or are we committed, right? I do think many agency, even loan officers, sometimes are just kind of interested in being a real estate agent and or lender, right? And there's others that really are in it, kind of leaning into it. They don't does not matter what the market is. Rates don't matter, right? I think we're just really focused on serving the community and finding ways to talk to more people. I mean, at the end of the day, it's how many more people are you and I talking to, right? I mean, if we kind of close up and we kind of get in our little corner, we really have to step into today's market and find the people that are looking, right? And I think that has been a huge shift over the last couple years, making some changes, getting out there, talking to more, and then not just being within a certain type of demographic. I think fishing in different ponds, right? I'm all about like what pond am I fishing in? And so I love to have my fishing pole in multiple different ponds because you never know where the fish is gonna, hook, right? And so being able to serve that first time home buyer or in that investor, or maybe I'm in my car and I drive 2 hours north or 2 hours south, making that investment for yourself can make a huge difference within your business. I mean, I've seen it for me, and this is another booming year. And I will tell you, being a top performer, I needed a little bit of therapy because over so many years within Middle Tennessee, our numbers continue to grow, right, and
Sure,
grow. And then there got to that place of time where they went a little, you're still here, but they kind of went the other
sure.
direction, even though it
Yep.
was still great, and it's like, oh no, no, the bar's already raised. We don't, don't go down from that. But you get to a place in life too where you just love what you do and you serve as many people as we can, and you just do a great job. Thinking back of kind of like how did we do things, back in the day, or what would I have changed? I probably would have taken more risks. My daughter's now like, "Mom, do you have to talk to everybody everywhere you go?" And I'm like, I should have
Yeah.
done that 20 years ago, and made it known that I am a lender and here to serve, and or just be a true resource. I think a lot of what you and I do is serve the community with no expectation of anything in return. And we're using all the tools from the past in a way that is just helping today's buyer. I think that's important. Now, again, prices of homes are higher, right? And interest rates are higher. So we have to be thinking really creatively on that. And the cost of goods are higher, right? And so there's lots that go into qualifying and making sure that people feel good with everything.
Yeah, I think it's interesting as we study the market, even the top performers out there are, creating 1 to 3% of market share, which is really small. You said blessed to be in a community like Nashville where that can happen. 1 to 3% market. There is enough business out there for top performers to go out and do what you said, right? Get into relationships with people in the community, become the local economist of choice, become the expert at your craft. And I always say, if you're in it for the long haul, which you and I obviously are, and so I have plenty of decades left of doing this,
Yeah.
not every year is going to be our best year. Like that would be a foolish goal to set. And then so we learn not to always measure best year by number of units, but do I run an effective business given the resources that I have with the revenue? And again, as a there's the business owner hat in this industry that I think a lot of people miss, and then there's the realtor or the lender hat, right? That we get to wear. The realtor hat's really fun, right? And I love the business side of it too. How do we go out and serve the right number of people such that it provides a healthy lifestyle? And as you say, as you fish into different ponds or diversify across different classes or different people to be able to serve different communities, we look, Dane and I get roped into, you know, high school kid, Wilson County circles, because that's where we're at in our life, right?
Yeah.
She's got her kids over in Mount Juliet. I've got mine. Jennifer and I have them, in Lebanon, and that's just where we're at in our on our journey. Um, we've also learned to get into business with other people. I mean, the Huffaker Group's 30 plus agents at this point, and they have resources, but it still comes back to our whole goal is always, I know yours is, how do we serve the community, not just be a highly transactional brokerage, right? We're relationship driven. Over 60% of our business comes through family, friends, word of mouth referrals. And I know yours is the same way. And so I think for agents that are out there or lenders that are out there that are, focused on growing and building, and again, Carrie Ann, AI is not going to take that away from us, right? AI is not going to build relationships in the community. AI is not going to sit next to, Miss Sally at the pew at church on Sunday, right? And so kind of like that piece of it's not in this type of business is not going to disrupt us from that perspective. Uh, you said earlier something about the rates, right? And I know everybody's like, when are rates going to come down? When are rates going to come down? And I've challenged my team to really consider, we did see rates eclipse 6% probably for the first time on the conventional, what, in March, maybe, first
Yeah.
time in a while. It wasn't there long, right? But I mean, you saw the floodgates kind of open up a little bit, like
Exactly.
psychological numbers, right? And so we know there's a lot of pent up demand out there. We know that, but realistically, if I'm a buyer right now, and okay, 6% causes me to get excited and move and the market to get active, and 6.5 doesn't. What's a 0.5% really mean on a $500,000 home or $400,000 home, the average around here? How much does that really impact me on a 30-year note?
I think you're onto something. I think we think of that rate, but then again, what's the cost that we're actually paying, and or what is that really due to our monthly payment, right? And if it's only a couple $100, again, you and I both know, again, a couple $100 could be quite an effective situation to each family, for sure. But I do think, again, what goes up, and we've been hearing this, will come down. Interest rates right now in your governments are under 6%, right? And so, again, also remember, credit scores are associated with those interest rates, right? So the higher the credit score you have, the better the interest rate is going to be. It's still not terrible because we did,
Yeah, we're close.
yeah, we hit over 7% there at one time as well. So we're moving in the right direction, but again, we're not we're not where we all thought we were going to be. But I definitely think where you could possibly use tools to bridge yourself, to a place for tomorrow, right? You could do a 1 year and lower that interest rate 1% and kind of prepare yourself for tomorrow, or kind of start to move yourself and like you said, use kind of more of the thought process where each month you increase your payment just a little bit so you are prepared to make, whatever today's monthly mortgage payment is.
Because I think that's where it really matters by having good people, your good lenders and good realtors to be able to go out, because it may be more important that we negotiate effective terms for someone using those dollars versus being able to get $15,000 off the price of the house, right? I think $15,000 in your mortgage is not going to make a huge difference versus us being able to utilize those dollars for some type of rate buy down, some type of arm, some type of, we're going back to, we used to do this back in the day, right? When we represented builders, right? A year of HOA paid on their behalf. I mean, that drops somebody, if we've got some townhomes right now, if somebody drops $150 a month, that's not that much money out of pocket, but ultimately it saves them that. You also got to utilize tax returns if you're going to itemize, because you can write off the interest on your house now. You're going to save a little bit more money. There's all these little things that go into it that, without an educated person by your side or someone that's thinking through that, it may feel like negotiating a lower price is the best win, right? But you and I both know the 30-year payment is what's really going to matter. And there's so many cool things they can do with the right people by their side.
Yeah, and being able to maximize the seller concessions right now, right, and or builder concessions, is a win. Right now, we're looking at application, already kind of carving that out, right, knowing what is going to be the best strategy versus having the agent just try to figure it out. Not just lender, it's not just real estate agent. We working together for the client, right? I think that's really important. So, I knowing what's going to be the best option for borrower A, right? And me communicating that, right? So then you can do what you're so great at doing, which is negotiating, the seller. But like you said, we see a lot of price improvements right now, which, yes, I can appreciate the fact that that's going to maybe lower it to a different category and it's going to turn a different head, right? We understand that. Yes, there's many different options. Again, you're looking, like you said, the buy downs or the arms. There's even that interest only option where it's focuses on principal before interest, called the all-in-one loan. Again, that's a great option too. And I think just communicating, right, and educating more of our community on what is out there, I think is really important. And so I think, leaning into education, right? Those that are out there listening, ask more questions. Somebody did it before you and I, and maybe that person that has been able to pay off their mortgages that aren't changing their lifestyle and maybe don't have any more income than you and I, right? Or just shifting it properly. How are they doing it, right? And so if we can learn from them, and we can kind of give guidance all the way through, I think that's going to help many more. And I love that we're seeing some young first-time home buyers get into the industry, as in purchasing their first homes younger. I also see, you did a stat the other day that, the average first-time home buyer, I think, is over 40, you were saying, or something like that, right?
That's right. Yep.
That's interesting.
I think it's important that, first time home buyers today recognize that we all made compromises. We all used some real estate hacks. We all were creative in how we came up with how we bought that first house. We know there's no wrong time to buy the right piece of real estate. If you got the right people by your side, Carrie, it's no doubt why you're so good at what you do, why so many people trust you. You're obviously brilliant at this industry and helping navigate people through that loan process. Thank you for being a partner for us. Thank you for sharing some of your time and your feedback. Where can people get in touch with you if they want to talk to you more, or want to maybe apply for a loan, or just pick your brain on business? What's the best way to reach you?
Yeah, absolutely. We work 7 days a week at a really easy phone number here, 615-456-4456, or you can visit us online at mymortgageteamsite.com, mymortgageteamsite.com. So thank you, David, for having me, and I'm grateful for our partnership and also our friendship.
Absolutely. Talk to you soon.